This video is intended for credit spreaders. I'm not going to teach you the strategy during the video, but I am going to show you how to execute the strategy. I have a symbol group called High IV that is ideal for this particular strategy because these stocks have high option implied volatilities. What that means is that you're going to be able to sell out of the money put credit spreads, out of the money call credit spreads, distance yourself from the action, and allow time decay to whittle away at the position. This is a higher probability trading strategy, so it's very consistent, more so than buying options. You'll notice that the subscription price is $249.95 per quarter, and these are the symbols that are included in this particular subscription. Today and tomorrow, it's Tuesday, September 30th. Tomorrow is Wednesday, October 1st. I'm going to lower this price to $199.95 per quarter, and I'm going to include the platform for $60. So you're getting about $110 taken off of those two subscription prices. This is a really good deal. I want to include the platform because I'm going to use it to show you how to take a look at the trade signals and how to make decisions. There's an additional kicker. Anyone that has subscribed to High IV will also get an email with a video link, and I'm going to send you a trade. I'm not sure if it'll be tomorrow, Wednesday, or Thursday, but any subscriber will be getting that email with that video. I want to help you put your first trade on, and so it'll include the rationale behind the trade, the entry parameters, the exit parameters, everything. Hopefully this first trade will be very successful and it'll pay for your subscription. If I log in, I'm able to scroll down and see the entries and exits today on the website. So you can see we were long Zillow, we exited, we took a small loss, and this is all based on one share of underlying stock. And today you can see that we shorted Zillow, and again we use the opening price for our entry and for our exit, and these alerts come out 4 hours before the open, so you'll always know what the system's doing. You'll also notice that our current positions are down about $1.57, so not much happening there. However, if I continue to scroll down, you'll see we're up about $26 this month. And we'll go back. We'll take a look at August. We were up $39 in August, an excellent month. We'll go back to July. And we were up $25 in July. You can go back 15 months and see how the system's done. It's performed very, very well. So let's take a look. Now, if you did not have the platform, you can also go down to the chart and you can enter symbols. So for instance, let's put in Zillow. And you'll be able to see all the entry and exit arrows. So even if you didn't have the platform, if you're an old subscriber and you didn't have the platform included, everything that I'm going to show you today will still apply, as you can still see the entry and exit arrows. The platform gives us a few extra tools that we can use, like moving averages and such, to identify support and resistance. So let's use the platform, and we'll go through each one of the symbols. And what I'm going to do is I'm going to start off with Zillow, but I'm going to bring up the chart here. Now, my version is real-time because I have a brokerage interface with Interactive Brokers. So if you're an Interactive Brokers customer, you'll be able to take advantage of those live data feeds. Otherwise, you'll be able to use the platform on an end-of-day basis. So when you come in the morning, you're still able to get the trade alerts through the platform, And because we are using end of day data, you'll be able to see the charts. Everything will show up perfectly. So you can see here that our current positions for high IV, we're short Zillow, Solar City, Pandora, 3D, Twitter, and we're long for Solar. Now we got out of Zillow long and we got into the short position. I'm just going to expand the window using that little box up here, and you're able to see the date that we took the position and what our entry price was and our exit price if that's appropriate. So let's click on Zillow and we'll talk a little bit about credit spreading. The idea behind credit spreading is to distance yourself from the action and to take advantage of time decay. And you can see here that if you followed the trade signals, you would have done very well buying puts and calls. We're up about 97% on the underlying using the system versus 35% for buy and hold. If you use these signals for your credit spreads, in this situation right here, you get a buy signal and you know that support is just below it here at say $124. That is your stop out point. So we're always looking for support and resistance levels so that we have that between the stock price and the short strike price. So if I were selling a credit spread here, and we can see in the right margin that the stock was at 123.48, I'm going to sell the 120 put and I'll buy the 115 put. And I'll probably be able to do that for a very nice credit because Zillow has a lot of option implied volatility. As that stock takes off, this credit spread expires worthless. So we continue into earnings. We never trade an earnings announcement, but we do get a buy signal right in here. And what we would do on Zillow is, again, we take a look at our support and resistance, and we know that the stock has distanced itself pretty much from this horizontal support level. So maybe we can get a little bit closer, like right in here, by selling the 125 put and buying the 120 put. We'll be able to get a nice credit for that. And the stock moves higher, and those options expire worthless. Now, lo and behold, we get a sell signal. Now, a sell signal in and of itself is good, and we have this resistance level that we can lean on right here, but we also know it's right at 148. You can see that in the right axis. We also know that we have major resistance here at $160. If it's me doing the spread, I'm going to sell the 160, 165 call credit spread. I'm going to distance myself from the action so that when the stock, if the stock does rally up, I know that it's got major headwinds up here. And if it happens to get through 160, I know I'm wrong and I've got to buy that spread back in. But you can see here how the stock continued to drift lower and lower. I'm going to do some very basic technical analysis here. I'm just going to put up a 100-day moving average. SMA 100, I just click that so that it overlays. I'm also going to add one other tool that I like to use. I just entered the symbol Z by typing it in the middle of the screen, and I'm going to overlay SPY. It's always important to see what the stock is doing relative to the overall market. And here you can see relative weakness. So the stock pulls back with the market, but the market charges higher, and it keeps going, where Zillow has started to flatten out. In fact, the market's still pushing higher, and Zillow is rolling over. That makes me feel pretty good about selling an out-of-the-money call credit spread because I know that the stock is not rallying with the market. So here we drift lower and we drift lower. And on this buy signal right here, we know that we've got the 100-day moving average right here, and we can use this support level as well. If we did that, that would put us at 125. We could sell the 125, 120 put spread on that buy signal. But that is our stop out point, and we also could stop out right here at the 100-day moving average. So before the stock really even moves against us, we're reeling that back in. Quite honestly, if I start to see a downward trend like this, until I'm certain that that low has been put in and that we've retested it, I usually like to see it fall down, make a low, come down and test it, and then bounce the second time. Then I feel pretty good, especially if it's back above a major moving average. But in this case, it bounced and rolled over immediately and we get a sell signal. So we would be reeling this in on the breach, and then we would be selling the 135, 140 call credit spread. And now we know that this stock is in a downtrend. So I most certainly would not be looking at that buy signal. I would just stick with that out of the money call spread that we sold and let that expire in October. That's how I would approach Zillow. We'll take a look at each one of these. Might take me a few minutes, but you'll get the idea, and we'll use the same tools that we have. So here we can see that we have a bullish trade right here, but it's heading right into earnings, so would really ignore that. But we get a bearish signal right after earnings, and we can see that the stock is pulling back after that earnings announcement, even when the market is rallying. Again, this is the SPY. So yes, I'd feel pretty comfortable selling an out of the money call spread, and I would probably try and sell the 77.50, 80 call spread, just to give myself a little bit of cushion in case the stock runs up. You could do the 75.80 as well. So now we start to see the stock roll over. This spread is already expiring somewhere in here. Now we're just waiting for the next signal. We get a long signal here, and we can see how the stock has been trending lower while the market's been basically trading sideways. We could put up the 100-day moving average and say, okay, I can sell this put credit spread, but here's the problem with that, is we have to watch these horizontal support levels, and that's been breached right in here. So this stock has already been chopping in a downward fashion. It's broken that horizontal support level, so I'm not real excited about putting a trade like that on. Quite honestly, I would ignore that, but now here we get the sell signal. Now I'm excited about this because I've breached the 100-day moving average. I've got the market selling off, and I know that the stock is going to have a hard time getting back above this. It was horizontal support. Now it's resistance. So I'm going to have my stop somewhere around 67.50. I'll sell the 67.50, 72.50 call credit spread. I like to go 5 points between the strike prices, and I like to try and get a $1 credit. If I do that and the spread expires worthless, I'm able to make a 25% return based on the margin that I have to put up. And you can see stock pulls back, and once it does that, I can even move my stop down to $65 because we know that that 100-day moving average should be a major resistance level, and already now the spread's working in our favor. Pandora. Here you've got a very choppy stock. You can see a sell signal here right at the top, and you can see the stock is not able to advance with the market, and it's starting to roll over. So I'd feel pretty good about taking this short signal right here, and I would have my stop right up around that $29 level. And I would probably sell the 30, maybe 33 call credit spread. So the stock starts to come in. I'm not going to pay a whole lot of attention to this buy signal because the stock is weak relative to the overall market. Now it continues to deteriorate, and I can see that the market is also rolling over, and I get another sell signal here. I can move my horizontal resistance level down, try and get a little bit more aggressive, and maybe go at the 27.50 call credit spread, and using that same level as my stop. Stock breaks below the 100-day moving average. Now I'm feeling really good about the trade, and I can move my stop down to this 100-day moving average. 3D systems. Similar setup. Here you've got a long-term downtrend, and now stock pulls back, I would not sell that put credit spread here because we get a buy signal. Normally I would not sell that because I'd want to see, after a big drop like that, I'd want to see a retest. Now it would have been a good trade, but I want to see that price level hold. We get that bounce up in here. We've got a horizontal support level now. The market's in go-go mode, so I'm feeling pretty good about that right now. And I put up my cross section here. You can see probably would sell the 47.50 put spread, or I might even go down. We're just in the money here at 47.50 because you can see in the right margin that low is about 46.90. So I could probably sell the 47.50, 42.50 put credit spread and reel it back in if this horizontal support level gives. Stock runs up, and now it's starting to flounder around. We get a sell signal up here. So I might want to wait a day or two, see if the stock, especially on that sell signal right there, we're kind of in no man's land because the stock has made a nice run. It's above the 100-day moving average. I wouldn't be too excited about selling this call credit spread right here on that sell signal. Why? Because it could go boom, 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 boom. I don't know yet. But once I start to see this resistance level in here a day or two later, and I see the stock poking back below this 100-day moving average, and I start to see the market rolling over, most certainly, if we didn't get these two signals, I could look back and say, okay, I think I'm ready to sell that call credit spread now. And you have a resistance level that you can put your stop at right there at $54. And you would sell a 55.60 call credit spread because the stock would have to break through that resistance level in order for you to get in trouble. As the stock breaks that 100-day moving average, we're still in the trade and we're feeling pretty good about it. We can ignore that signal. We get another sell signal, so we're feeling pretty good about it there too. If I did nothing until this sell signal here, I'd be able to sell a call credit spread. That SMA is at $52. So I could sell a 52.50, 57.50 call credit spread and feel pretty good about it, knowing that we've got to get back through that 100-day moving average for the trade to be in trouble. But you've got the market trending lower, the stock trending lower. You know that selling call premium is the side of the trade that you want to be on. Twitter. I'm going to take a look at DDD. I haven't really pointed this out, but you can see that call buying has been very, very effective for this particular system. We're up 120% in the last 13, 14 months using the system versus minus 15% for buy and hold. So the signals are very, very good. Twitter, we're up 75% versus 24% for buy and hold. So these signals are excellent. Twitter, we've got the earnings announcement here. The stock gaps higher. We get a little bit of a sell signal in here. Now, you could take that sell signal and you could say, okay, it's at 47.01. If you go across to the right margin, that's the high in here. I'll sell the 47.50, maybe 52.50 call credit spread. And if that level is breached, which it was right here, I'm going to get out of the trade. And you'll see here that a lot of time elapsed, and that spread probably expired worthless in in August before it made its run up. You'll also notice that you've got a buy signal right here, but you're still trying to identify how far that stock is going to pull back after that gap higher. So wouldn't feel too good about that particular trade. We start getting in here. Now you've got a breakout to the upside. You've established an uptrend here, and you have a horizontal breakout through that prior level. And you get a buy signal. This would be a good place to sell an out of the money put credit spread. You can see that time elapses, that put credit spread expires worthless, and now you're starting to get some signals up in here on the stock. Well, that's your resistance level at $53. Let's call it $53.50. So all along we're going to be looking at selling a $55 call credit spread, because in order for that credit spread to get into trouble, the stock has to make a new relative high. We have one other thing working in our advantage. The SPY is starting to fall apart. So we've got relative market weakness, which only makes that trade even more attractive. So we'd sell the 55.60 call spread, should be easily able to get $1 for that. Time's already elapsing, so that trade is working in our favor. So again, our stop is right at that high right there. First Solar. First Solar, we're up about 80% versus 56% for buy and hold. So the system has worked well for this stock. And we can see that we've got the earnings announcement here. The stock runs up dramatically on that news. And I would want to see if this resistance is actually holding up before I would take a sell signal. We get a little bit of a buy signal in here. And again, we're wondering if this move higher is going to hold. I'm going to go back just a little bit here to see if I've got any other support levels that I can lean on. So you've got the first test here. I'd like to almost see a second test where that's held and it doesn't hold in here. So I don't know that I would be selling that put credit spread, because the stock ran up dramatically and it could easily roll over. I don't think I'd be selling this call credit spread either. I'd be waiting for some technical confirmation. Now we see another sell signal in here, and we see the stock starting to chop around. So it looks pretty exhausted. And then we also have the market starting to roll over, and we can identify this resistance level. The closing high was around 72.50, so we'd be able to sell a 72.50, 77.50 call credit spread. And then now we start to see that stock really rolling over, and we've distanced ourselves from that strike price. It's already a very profitable trade, and we might even be able to reel it in. We also know that we've got this horizontal support level that's been breached. So if we really wanted to lock in our profits before expiration, we would close that trade down if the stock closes above $69. We've already looked at Zillow, so now you have an idea of the types of things that I look for when I sell out of the money put and call credit spreads. I've shown you how to overlay simple moving averages. I've shown you how to put up the SPY so that you can look for relative strength and relative weakness. You've also got the trade statistics, so you can see how well the stock has performed using the system in the past. This is a really awesome deal. You're going to get the end of day platform for $60. You're going to save $50 off of the subscription price, and in the next day or two, I am going to send all high IV subscribers an email with a video link, and I am going to set up our next trade. So I'll show you how to enter the trade. I'll show you why we're entering the trade in the video. I'll show you where our stop out points are. I'll show you what the option premiums are trading for and exactly the credit that we should be looking for. I want your first trade to be a success, and if I do any of these videos in the future for high IV to attract new customers, as an existing customer, you'll also be able to see those videos as well. So I really hope to have you on board. Just come to www.oneoption.com, hover over stock, select high IV, and you'll be able to use this subscribe button, and you'll see the rate will be $199.95 per quarter. Thank you. I hope to have you on board.